If you thought the biggest move in SpaceX stock already happened after its historic IPO, you may want to think again. While most investors have been focused on the recent pullback, Wall Street is preparing for an event that could completely change the supply and demand equation. Reports indicate SpaceX could soon become eligible for the Nasdaq 100, potentially forcing passive index funds to purchase massive amounts of stock within an extremely limited public float. If that happens, it could become one of the most closely watched institutional buying events of the year. Here's why investors are paying attention. Let's start with the stock itself. After raising an unprecedented $75 billion during its June public debut, SpaceX quickly became one of the largest publicly traded companies in the world. Investor excitement initially pushed shares to new highs, before the stock entered what many analysts describe as a healthy post-IPO correction. Instead of continuing straight higher, shares pulled back and have recently stabilized around the $153 level. For some investors, that's a sign that momentum is fading. But for others, it's exactly the kind of consolidation they were waiting for. The biggest reason is what could happen next. Following the close on June 26th, reports indicated that SpaceX qualifies for inclusion in the Nasdaq 100 index, with the rebalance expected to take effect in early July. Now, here's why that matters. Index funds don't buy stocks because they're bullish. They buy because they have to. Funds that track the Nasdaq 100 are designed to mirror the index. When a new company is added, those funds generally need to purchase shares, so their portfolios continue matching the benchmark. Normally, that's just another routine market event. But SpaceX isn't a typical company. Only a relatively small portion of its total shares became publicly available during the IPO, meaning the public float remains far smaller than many companies of similar size. That creates an interesting situation. If large institutional funds begin purchasing shares while the available supply remains limited, basic market mechanics suggest buying pressure could increase significantly. Whether that ultimately results in a major price move will depend on market conditions, liquidity, and investor behavior. But it's one of the main reasons traders are watching the upcoming rebalance so closely. But that's only one piece of the story. While investors focus on index inclusion, SpaceX continues advancing the business that built its reputation. Just days ago, the company successfully completed another full-duration static fire test at Starbase, moving Starship Flight 13 one step closer to launch. For many investors, these tests aren't just engineering milestones. They're progress toward one of the company's largest long-term opportunities. Every successful launch helps validate the next generation of Starship hardware, while supporting future commercial missions and NASA's Artemis lunar program. As launch reliability improves, development costs can potentially decline, allowing the company to scale operations more efficiently over time. And then there's another development that hasn't received nearly as much attention. Earlier this month, SpaceX completed a Falcon 9 mission carrying a classified payload known as the Starfall Demo mission. While official details remain limited, publicly available information suggests the mission could represent an early step toward commercial space return logistics. Think about that for a moment. Today, most people associate SpaceX with launches and satellite internet. But tomorrow, the company could also participate in returning high-value products manufactured in orbit back to Earth. If that business develops successfully, it would open an entirely new commercial revenue opportunity beyond launches and connectivity. Taken individually, each of these developments is important. But together, they paint a much bigger picture. The stock has cooled after its historic IPO. Institutional demand could increase if index inclusion proceeds as expected. Starship continues moving toward its next major launch. And SpaceX keeps expanding into entirely new business segments that many investors haven't fully priced into their long-term expectations. Of course, newly public companies often experience significant volatility, and no catalyst guarantees a higher stock price. Market conditions, execution, and investor sentiment will continue to play major roles over the coming weeks. But one thing is becoming increasingly clear. The story surrounding SpaceX is no longer just about the biggest IPO in history. It's about what happens after the IPO. The next few trading sessions could reveal whether institutional buying, continued operational execution, and expanding commercial opportunities become the foundation for SpaceX's next chapter as a public company. If you enjoyed this breakdown and want more updates on SpaceX, Tesla, and the biggest growth stocks moving the market, be sure to like the video, subscribe to the channel, and turn on notifications so you don't miss our next analysis.